morning to our friends on the West Coast. Good afternoon to our friends on the East. And it's Wednesday. You know what time that is. It's time for the World on Finance with your host, Mr. Everett James. Hey, good morning, Ev.
Good morning, Mr. Brown, and how are we being received from the West Coast?
You being received very well. Just talk a little bit louder, turn up your volume a little bit, and I think you are there.
That's great.
Yes, sir. Yes, sir. Okay, I'm going to step aside after. I remember I asked a question last week, and you and I confirmed it, I believe, a day or so ago. And that is given the state of the economy right now, who pays the tariffs?
Okay, that's something we will take up in more depth next week. That's an issue that I touched on, but really didn't go into any depth. But we'll look forward to at least from this vantage point, some way of you determining for yourself just how impactful the tariffs have been.
Okay. All right. I'll step aside, and the floor is yours.
Okay, thank you so much, Mr. Brown, and welcome, listening audience. This is Everett James, your trusty tax reporter, coming to you every week, every Wednesday, as a matter of fact, coming to you from the West Coast. However, because of the fantastic capabilities of our computerized system, we will be working jointly and sending you the messages every week through the trusty podcast owner, William Brown, who actually is on the East Coast. so today, um, I think I'm going to just review for you some of the top issues that many taxpayers have. One is, if you made a mistake on your tax return for 2025, should you amend it? And then we'll also give you some quick updates on recent changes. We'll give you a quick look at just an increasing uh, 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 travesty affecting our veterans, and that's how the VA Home Loan Rescue Program has been canceled. Over 10,000 veterans have lost their homes. Then we will take a jump into the gig economy that many of you are involved with, and it's really been estimated that at least a third, between a third and 50% of all of taxpayers are involved in the gig economy. What is the gig economy? And if we have time, we'll take a look at some of the methodologies that are available to you to take care of taxes that you are being hounded by. And a quick look at the Fresh Start program if we have time. The And this is all based on the gig economy, which you should be doing, even if you're not involved at this current time. What you might want to do to just prepare for that, if you look down the road and see that your finances are nowhere able, like most of us, able to keep up with inflation as it ravages our purchasing power. Okay, this is Everett James. My contact point is calling 951-522-9877. That's 951-522-9877. And for those of you who are more disposed to the internet communications, EVJTAX1 at gmail.com. That's EVJTAX1 at gmail.com. Just before we get into some of the major highlights of this morning's program, want to just remind you that we have a local baseball team in Southern California that's doing so well, 9 and 10-year-olds, and they've been organized into a 501c organization, nonprofit organization, but they're just doing so well that they've been invited to participate in an international um, competition. For those of you who live in, particularly in Southern California, or in middle California, the there's going to be a huge international tournament coming up just in a couple of weeks from now, somewhere between uh, approximately June 17th and June 23rd or 24th. The competition is going to be raging in Chino Hills, a community, local community here in Southern California. And I'll be here with the complete details on that tournament and how you might how you might participate as a contributor. So keep in mind that they are looking for cash contributions and, of course, in-kind contributions. For the team, baseball uniforms, cleats, bats, helmets, and anything that could be used to assist in paying for their overnight stays when they have to go out of the area to compete or out of the state to compete. So we'll try to keep you up to date. The owners of this 9 and 10-year-old baseball team, uh, um, Mr. and Mrs. Wooten, Wooten, uh, are the owners, and we'll be doing some promotions for them next week and bring you up to date on the big international tournament that's coming up with 2 weeks from now. Wow. Okay, folks, for those of you who have filed your 2025 tax return and you made a mistake, many people now are facing the question, well, should I amend that return? Well, Broadway's biggest star, Alexander Hamilton, summarized the problem neatly. In common life, to retract an error, even in the beginning, is no easy task. Mr. Hamilton once wrote. Uh, Perseverance, however, confirms us in it, and it rivets the difficulty. While Mr. Hamilton wasn't writing about income tax bloopers, his words undoubtedly will resonate with millions of modern day taxpayers. Nobody likes to admit mistakes, granted, especially on tax returns. But as lawmakers continually add layers upon layers of complexity to the nation's tax system, millions of taxpayers each year face these corny, really not corny, but thorny questions about how and even whether, to fix errors and omissions. Tax advisors say some clients really fear that filing an amended return is just tantamount to waving a red flag in front of auditors, tempting them to question every line. Some people would rather play the audit lottery and just pray that they won't get caught. Others worry that trying to correct even relatively small errors will be just too much for the IRS's antiquated computer systems to handle and could even create more problems. What do you do? Well, that depends on the details of each case, such as the size, the type, the number, and the reasons for the errors. The process may appear relatively simple, but appearances can be deceiving, even in cases involving honest mistakes or new data. What might seem to be a simple change, can ripple through the entire tax return and affect many pages. That's according to Claudia Hill, who's president of TaxMam Incorporated in Cupertino, California, and an enrolled agent. Enrolled agents are tax experts authorized to represent taxpayers at all levels of the IRS. Now, even so, most taxpayers shouldn't be afraid at all to file an amended return. That's according to Stephen D. Philippus, rather, of Dave Philippus Financial Group, and that's a wealth management and tax firm in Wheaton, Illinois. Reasons for making amendments, vary widely. Examples include just forgetting to report a dividend or interest payment, neglecting to take advantage of various tax credits or deductions, or just receiving new information you just didn't have when you filed the original return. What may be right for one taxpayer could be wrong for another. Here's some of the answers to some questions that readers may have on fixing errors. One question has been, how many people typically file amended returns? Well, according to Eric Smith, who's an IRS spokesperson, he's been in that position for a good number of years. But he says there were about 3.7 million amended returns filed on Form 1040X in the fiscal year ended in September 30th of 2015. Question, can I file an amended return electronically? The answer is no. You have to file the old-fashioned paper way. Another question that it has come up, how quickly does IRS handle amended returns? That could affect whether or not you even decide to go that route. Not quickly. I would imagine that if you recognize the fact that it could take up to 16 weeks, 4 months, to process, and up to 3 weeks from the date of filing to show up on the system, according to IRS. Sometimes the process takes much longer. One of the other spokespeople that I mentioned, Mrs. Hill, she warned that there have been an increase in amended returns, particularly since the passage of the big beautiful bill last July 4th. That really changed the filing methodology of most people, and with the increase, huge increase in the standard deduction as opposed to filing your tax return on a Schedule A, with that huge increase that you get just gratis with the on the Schedule A. Instead of filing the Schedule A, a lot of people just use the standard deduction. So the very, 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 very first fork in the road, you might say, that all taxpayers face when they are getting ready to file a return is, I just take the newly minted standard deduction? Well, you compare that with what you have been able to write off on Schedule A, and if there is a significant difference between those two results, obviously you're going to take the greater of the two for your write-off, and most people have been using the newly increased standard deduction because they compare it to what they can get on the deduct on the schedule, and it becomes obvious very quickly they can't come close to what the standard deduction will provide. So the a question that has arisen with filing amendments: should taxpayers even bother fixing routine math errors? Well, the IRS says it may correct mathematical or clerical errors on a return and may just accept returns without certain required forms or schedules. Now, in such cases, sometimes there's just no need to amend your return. However, IRS says do file an amended return if there's a change in these areas, if there's a change in your filing status, if, income, deductions, or credits. Again, do file an amended return if there's a change in your filing status, your overall income, your deductions, or credits. Those basically four areas: credits, deductions, income, or filing status. Okay, another question that often comes up: suppose I want to fix mistakes on tax returns for more than 1 year. Can I do it all in one form, on one 1040X? Well, the answer again is no. You have to file a separate Form 1040X for each year that you're desirous of making a change. IRS also wants you to mail each form in a separate envelope. Um, for depending on the year. So don't mix up, don't put more than 1 year in one envelope. Make sure that you have a separate Form 1040X in a separate envelope for each year that you're intending to amend. Also, don't forget to check out any state filing requirements. One of the consultants have mentioned that IRS just wants to remind you to include the year of the return that you're amending at the top of the 1040X. Another question: can I fix just one error and ignore all my other mistakes? Nope, you cannot. If you file an amended return, you have to correct all the known mistakes. Um, the You can't just cherry pick what you want to fix. Okay, another question that has come up frequently: are taxpayers required by law to file amended returns with the IRS to fix errors? Well, no, not by law, and that's according to Brian Scarlatos, who's a tax lawyer at the Castellanes. I hope I'm pronouncing that right. Castellanes and Fink LLP law firm in New York. Millions of people do it anyway because they want to get right with IRS, and because they hope that filing an amended return and paying other balances due will enable them to avoid any stiff penalties. Others who amend returns may qualify for a hefty refund or a worthwhile credit. Okay, another question that has popped up: how far back in time can I go to claim a refund or a credit on my federal return? Well, generally, you must file the 1040X within 3 years after the date that you filed your original return. That's 3 years after the date that you filed your original return, or 2 years after the date that you paid the tax. So if you paid the tax, it's 2 years. Afterward, you can file the return. Or if you're making a change just on the on a return that you filed, is within 3 years. There are exceptions. The time limit can be suspended for some folks who are physically or mentally unable to manage their financial affairs. And of course, that comes up all the time, particularly since when seeing how much of the population is going into aging senior years and have others prepare their returns for them, probably relatives or tax practitioners. So, what should I do if I just want to come clean on something that might be construed as civil fraud or even criminal wrongdoing? I can guarantee you, if you are in that situation where you might have, been concealing your income or just simply not paying, believe me, there are many folks who just gambled and not even filed at all. Get a hold of a tax practitioner. There's tons of us out in the marketplace. Get a hold of us, and we will help bring you up to date. Always better to bring you up to date than to be discovered. Which, if you are discovered, you're going to be looking at some hefty fines. The the exceptions, time exceptions, there are some exceptions, and some of the exceptions might be for folks who are physically or mentally unable to manage their own affairs, medical situations. Another type of exception is a money return that's based on bad debts or worthless securities. They have to be filed within 7 years after the due date of the return for the tax year. Or if, for example, a security becomes worthless. So see 1040X instructions for other exceptions. Now, what should I do if I just want to come clean on something that might be construed as civil fraud or even criminal wrongdoing? What if my return's already being audited? Well, this can be very tricky, but it's far too complex to delve into during this program. Consider hiring a seasoned professional who specializes in such subjects. Remember that an amended return is really an admission that your prior return was wrong. Some lawyers say taxpayers probably should not file an amended return if they've already been involved in a face-to-face IRS audit involving that return. And really, in such cases, usually it makes much more sense to speak to an agent about the issue. Will my chances of getting audited increase if I file an amended return? Well, probably yes. Some advisors say. But however, there really is not any statistics on that particular subject. So hopefully we will, with your comments and questions, please indicate if you would like to have that subject returned, in that subject repeated rather in the future. So, folks, if you own a qualified small business stock, or maybe you're just mulling over investing in such stock, a new update on additional benefits, you could get a very, very nice tax break when you sell the stock. And last year's tax enhancement, the big, beautiful bill that got passed last July 4th, that provides a 100% exclusion from the capital gains tax. Individuals who acquire a qualified small business stock, it's abbreviated QSBS. Those who acquire a qualified small business stock after September 27th, this is way back, of 2010, and that's the original break. If you bought a qualified small business stock after 20 after September 27th back in 2010, wow, 15 years ago, and you sell more than 5 years later, you can exclude 100% of the capital gain from the sale, and the gain is exempt from alternative minimum tax. The amount of excludable gain is capped or limited at the greater of 10 times your stock basis or $10 million or $15 million if you bought the stock after July 4th of 2025. So oftentimes the total excludable gain depends on whether it, on when you bought it. Either bought it originally after last of September rather 2010 or after July 4th this past year of 2025, and you held the um, if you bought it after July 4th of last year and you held it less than 5 years before you sold it, it's 50%. I'm sorry, it's really 100%. If it's 50%, rather it's 50% excludable gain if it was sold after 3 years, and 75% excludable if it was sold after 4 years, and then of course 100% if it was sold after 5 years. Um, what are some of the main uh, requirements? Only C corporation stock qualifies. The shares must be acquired in an original issuance from the C corporation. Stock bought from an existing shareholder, or rather in a secondary market, doesn't count. The C corporation must be a qualified small business when you acquire the stock. Okay, folks. Another thing that really is important, particularly for families, the new Trump account, which really came into existence last July 4th, and as a new type of benefit. But this is a new type of tax advantage savings account for our young children under age 18 who also have a Social Security number. I'm gonna when I mention that, I'm just going to always mention with it that yes, yeah, the Trump administration, they put in it right at the beginning of your enrollment in the Trump account. They put in $1,000. The Trump account allows up to $5,000 to be contributed each year by parents, and the it also up to $2,500 can be funded tax free by an employer of that parent or beneficiary. So keep in mind that the Trump account would be funded, by seed money right off the bat. Once you get enrolled, it gets funded by seed money of $1,000 from the federal government. If you're the parent, you can contribute up to $5,000 each year. The Trump account puts $1,000 seed money in each year, and that's for children born after 2024 and before 2029. So it runs, from 2024, from 2025 rather, through 2029. The And as I mentioned, it starts officially on July 4th of this year, of 2026, and it continues on by parents or any other person until the child reaches 18. So there are allowances for persons, of various types who have different relationships with children. The Of this amount, up to $2,500 can be funded tax-free by an employer of the parent. So right now, it's currently unclear whether the parent or relative must file a gift tax return or any other by any other professional organization. But just keep in mind that it can be set up, by the parent or by another relative. Wow! So that's a great way to help your child, get a good start, in his adulthood. The Now, folks, you will recall that in the big, beautiful tax bill that got passed last July 4th, they also uh, uh, um, provided exceptions and ways for you uh, to exclude your tips from your pay and overtime pay, beginning with the 2026 forms sent out early next year. So it actually begins, that actually is going to be take effect. It had already taken effect for 2025, but they're adding, beginning in with the 2026 forms, they're adding more codes for the box 12 of the W-2. So TP is just abbreviation is for the total tips reported by the employer, and TT is overtime. So TP is for tips, and TT is for overtime pay. Employees will find it easier to know just how much of their total compensation is qualified tips and how much of the total compensation is overtime pay. And that overtime pay is eligible for a 20% write-off under the One Big Beautiful Bill. So we will be, mentioning that, and we are, currently experiencing a uptick, in employment, general employment, and so that's going to be given a break, as because of the One Big Beautiful Bill that got passed last July 4th. So the if do you have a health savings account if you're an employee? The health savings account do have several major federal tax advantages that owners can enjoy. Contributions are deductible or are from pre-tax wages, subject to certain limitations. Earnings inside a health savings account build up tax-free for the account owner. Any withdrawal to pay medical expenses are also not taxed. And the health savings accounts, keep in mind, they do not have a use it or lose it rule. Okay, the IRS is improving its enforcement of the rules against stealing folks' tax identity. That's thanks in part to a lot of anti-fraud measures the IRS is using to filter out returns. IRS service regularly adjusts the filters to address emerging tax schemers. It changes the dollar amount and other thresholds upon which filters rely on to more effectively and efficiently improve its identity theft detection. So as a result, IRS stopped a combined $7 billion in fraudulent refunds from being paid out in 2024 and 2025. These filters are also flagging fewer legitimate tax returns. That helps to reduce the burdens on taxpayers. Okay, as I mentioned earlier, the just wanted to for the veterans wanted to just alert you to this incredible failure of a VA home loan rescue program that just got canceled abruptly. Over 10,000 veterans have lost their homes. The VA program, it was a mortgage rescue program. It was called VASP, VASP, but it was abruptly shut down in May of last year, leaving tens of thousands of veterans without a safety net. As I mentioned, more than 10,000 vets have lost their homes to foreclosure since the program ended last year. That's the highest pace in a decade for VA backed loans. Another 90,000 veterans are currently behind on their mortgages or actively in the foreclosure process. Veterans with VA backed loans now have fewer protections than most other American homeowners if they fall behind on their payments. Veterans already have been forced into higher rate loan modifications, and they're not going to see any relief under the new program as it's currently written. How did the crisis begin? What is the VAST program? When was that program canceled? The human cost. Why VA borrowers now have fewer options than other homeowners. They say that a replacement program is coming, but with caveats. What can veterans do right now? Well, we'll review that and repeat it again if we have enough veterans who would like a repeat of that content area. As I mentioned, more than 10,000 vets lost their homes since that program got shut down. The figure, as I mentioned, represents the highest pace of VA loan foreclosures in a decade. And, housing advocates now are warning that tens of thousands more veterans are at risk. The VA backed loans are now left with fewer options than almost any other category of American homeowners. A replacement program is now being developed, but gosh, it's still months away from being launched, and housing industry groups are already raising concerns that, as currently written, it may still leave veterans worse off than their non veteran counterparts. How did it all begin? Well, during the COVID-19 pandemic, federal government allowed homeowners across the country to pause mortgage payments through what is called the forbearance program for veterans with VA-backed loans. The program allowed them to skip payments temporarily, with the understanding that those payments would eventually be moved to the back of the loan term. You've heard of that methodology. Um, in October of 2022, the Biden administration abruptly disconnected a key component of the VA forbearance program, while tens of thousands of veterans were still enrolled in it. Suddenly, those veterans were told they were owed all the skip payments back immediately in a lump sum. For most, that meant coming up with tens of thousands of dollars that they just didn't have. The alternative wasn't much better. Veterans could accept a new loan modification, but the rates by that time, the mortgage rates had climbed quite a bit, from around 3% to 7%, and financing meant dramatically higher monthly payments. Many vets found themselves trapped. They couldn't afford the lump sum, and they couldn't afford the higher monthly payment either. Wow. So after investigative reporting in late 2023, it spotlighted the scale of the program. The VA just stopped the foreclosures across the board, and began developing a rescue program. That program became that VASP. So as I mentioned, it was shut down in May of last year. The agency gave mortgage servicers and even its own VA staff roughly 1 week notice that the program was ending. No replacement was ready. Veterans who had applied for the program but had not yet been enrolled or cut off. The door, as one person, one industry observer described, it just slammed shut. So the message was blunt, canceling all of those VASP programs without a backup in place. Those warnings did not prevent the shutdown. The VA, as of this point, has not yet publicly explained why that program was discontinued before a replacement program was available. So VA officials have not responded to questions on that specific point. According to the ICE mortgage technology, which tracks mortgage industry data, more than 10,000 vets have lost their homes through foreclosure sales in roughly 10 months. That's 12 months since the program was canceled. An additional 90,000 vets are currently behind on their payments or actively in the foreclosure process. And then now, with mortgage rates hovering between 6 and 7% over the past several months, vets who fall behind on a loan they originally took out at a 2 to 3% face a difficult reality. The only available options may be selling your home, accepting foreclosure, or just agreeing to a modified loan with a substantially higher monthly payment. Wow. The That's just an incredible that's an incredible disaster for our veterans who have were in that category. So, what can veterans do now who are they facing foreclosure? Well, if you're a vet now with a VA-backed home loan and you're behind on payments or concerned about foreclosure, there are some steps you can take right now. Number one, contact the VA Home Loan Program directly. The VA maintains a network of loan technicians who can discuss your options. You can reach the VA online at benefits.va.gov/home loans. Okay, to repeat, go online at benefits.va.gov/home loans, or by calling 1-877-827-3702. To repeat, calling 1-877-827-3702, or by going online at benefits.va.gov/home loans. Contact your mortgage servicer in writing. Document all communications. Request information about all available loss mitigation options, including any deferral options, in writing. Seek out some legal assistance. You can contact your nearest JAG office, judicial office, or legal assistance center on any military installation. Some organizations, such as the National Consumer Law Center, may also be able to help or refer you to local resources. Conduct Contact your veteran service agencies. A lot of states have veteran service officers. They call them VSOs. You can advocate on your behalf. Contact groups like Veterans of Foreign Wars, VFW, or the American Legion. So, what are some frequently asked questions? What was the VASP program? Well, VASP, what does that stand for? VA Servicing Purchase Program. That's VA Servicing Purchase Program. That was a mortgage rescue initiative, and it allowed veterans who had fallen behind on their VA back home loans with new affordable mortgages at a 2.5% mortgage interest rate. It was originally designed to help veterans who had been caught in a difficult situation stemming from the end of a COVID era forbearance program. Boy, there you are again, looking at some of those extremely beneficial COVID era programs and that got canceled immediately. So, how many veterans have been affected by that foreclosure surge? Or, as I mentioned earlier, more than 10,000 vets have lost their homes since that VASP was discontinued. An additional 90,000 are currently behind in their mortgages or actively involved in a foreclosure process. Is there a new VA program coming to replace that VASP program? Well, it's being developed, and once it's in place, it would allow veterans to defer missed payments to the back of their loan term. That would preserve their original interest rate. However, the program is not yet operational, not expected to launch for several months. Housing advocates in the mortgage industry have also raised concerns that as of currently written, the program may still leave some veterans worse off than their non-veteran homeowners facing similar situations. So it's really, just an absolute nightmare for our veteran population. Okay, folks, I had planned to do, quite a bit more with the gig economy, but we do want to bring that up today because that is certainly affects at least a third to a fourth of the current tax-paying population, and that is the gig economy. Keep in mind that the gig economy and all of the earnings that you get through the gig economy, it's also called the sharing and access economy. So we just introduce that again at this juncture and continue on at another, presentation of this program. But this is activity where taxpayers earn income providing on-demand work, providing services or goods. It's often through a digital platform like an application or a website. While there are a lot of types, of sharing economy businesses, ride sharing and home rentals are two of the most popular types of gig economy. Here's some things that you should remember. Income from these sources is fully taxable. And that's regardless of whether an individual receives information returns. So just because you don't receive a 1099 or a 1099K through the mail, it doesn't mean that it's not taxable. So you have to keep track. Even if you don't get a 1099 form through the mail, you got to keep track. And if you suddenly find yourself on the receiving end of communication from IRS that you are, that according to their records, you're liable for taxes on income that have not been reported. And they can go back several years. If you don't have any record keeping, oh, contact a tax practitioner or tax service because you are in a jam at that point. But the gig economy, as I mentioned, is also called the sharing economy or access economy. It's where taxpayers earn money, you provide on demand work, you provide services or goods. Like I say, it's usually through a digital platform online, and there's many types of sharing economy businesses. Ride sharing, home rental are two of the most popular. Here's some things that you should remember. Income from these sources is taxable, taxable, regardless of whether an individual receives information returns. This is true even if the work is full time, part time, or even if an individual is paid in cash. Because keep in mind that even if you're paid in cash, you don't know whether not the person who's paying you is keeping records and is filing taxes, reporting those that income on which you will be taxed. Um, so you may be required to make quarterly estimated income tax payments, and you may be required to pay a share of your Social Security, Medicare, or Medicaid taxes. Now, while providing the gig economy services, it's important that the taxpayer you're correctly classified, meaning that your business or the taxpayer, you have to determine whether if you're providing the service, if you're an employee or an independent contractor. And I would say that it would be extremely wise to just not make any assumption on that and making that decision, almost like the decision between using Schedule A for your itemized returns or just using the standard deduction. Contact the tax practitioner to get advice and help on making that decision, whether you are actually an employee who will get in a W-4 or a independent contractor, a gig worker who will be getting some kind of 1099 form. You can use, there is such a thing as a worker classification page on irs.gov. So go to the irs.gov to that classification page to see what activity you're performing and see how it's being classified by IRS. Independent contractors may be able to deduct business expenses depending on the tax limits and rules. It's really, really important for you to keep records of your business expenses. And it's an absolute certainty that if you have not been reporting any income for you, those of you who've been in doing side businesses without reporting, it's almost certain if you've been receiving money that and not reporting it, it's almost certain that you probably have not also been keeping track of any of your expenses. So if you're nabbed by IRS, you're going to be in a fix for paying taxes that you probably cannot substantiate expenses for because you haven't been keeping any records. um, so since your income from the gig economy is taxable, it's important to remember that pay the right amount of taxes throughout the year to avoid owing when you file. Now, an employer typically withholds income taxes from their employees' pay if you're an employee to help, and that's to help cover income taxes their employees owe. However, what's really different if you're a gig economy worker who is not considered an employee, you have two ways to help cover your income taxes. First, you could submit a Form W-4 to your employer if you're an employee to have more income taxes withheld from your paycheck. Um, if you have another job as an employee, but you can make quarterly estimated tax payments to help pay your income taxes throughout the year, including self-employment tax. So the keep in mind that you would get a lot of help from publication 5369, which is entitled Gig Economy and Your Taxes Things to Know. Again, publication 5369, entitled Gig Economy and Your Taxes Things to Know. Also, publication 1779, entitled Independent Contractor or Employee. What is that again? Publication 1779, Independent Contractor or Employee. And then another subject that IRS has done a considerable amount of publication and explanation for. That is my residential rental income, is that taxable or are my expenses deductible? You might want to just type that in, to the inbox to pull that information up from IRS. Is my residential rental income taxable? And are my expenses deductible? Again, publication 5369, Gig Economy and Your Taxes, Things to Know. Publication 1779, Independent Contractor or Employee. And then, is my residential rental income taxable or are my expenses deductible? Okay, again, please contact us for your comments and your questions, which we will make every effort to answer in the following week's program. Everett James at 951 522 9877. That's 951 522 9877. And email evjtax1 at gmail.com. evjtax1 at gmail.com. And folks, remember that we're going to bring you up to date on our local baseball team that's playing in an international competition. That's going to be great for everybody, particularly for folks who live in Southern California or even the middle part of California to drive down and see a group of 9 and 10-year-olds go at it in an international tournament held in Chino Hills, California. That's the general area where the tournament is taking place, and our team that this promoter here is promoting is run by uh, uh, Mr. and Mrs. Wooten. Cicely Wooten is the mother of one of the players, and also she and her husband own a 501c organization that has just been set up so they can receive contributions, but they are looking for contributions in kind as well as cash. to help them pay, particularly pay for the hotel, motel expenses from out of state and out of area stays, and of course contributions in kind or in cash to help them pay for uniforms, bats, cleats, helmets, and uniforms. So please keep that in mind. The And we will give you up to date information on the huge participation in a international competition taking place in this general Southern California area, coming up June 17th through the 23rd of this month. Okay, we will continue on with giving you more clarification on your responsibilities. If you are in the gig economy, which now, of course, many economists recognize as making up at least 25% to 33% of the total economy. But it is based on flexible, temporary, or freelance jobs. Often involves connecting with client or customers through the online platform. That gig economy benefits you, businesses, and consumers by making work more adaptable to the needs of the moment and demand for flexible lifestyles. At the same time, however, the gig economy can have downsizes due to other complexities. America is well on its way to further establishing the gig economy. And as I mentioned, estimates show that as much as a third of the population is already in some type of gig capacity. Experts expect this working number to rise as these types of positions facilitate independent contracting work, with many of them not requiring a freelance to come into you don't have to come into an office. Gig workers are as much more likely to be part-time workers and to work right from their own homes. So we will be looking forward to helping update you on the nature of the gig economy and your expected participation by IRS. And again, a good communicating with you, and we look forward to seeing and talking to you next week.
All right. AF, thank you so much for that. Really appreciate it. I put something on the screen because I'm looking forward to the question I asked during the beginning of the show. Because based on well-documented evidence and data, the importer, in this case, the United States, pays the tariffs and then pass them on to the consumer. So I'm looking for a more detailed report from you next week, and we're looking forward to that.
Thank you.
All right, my friend. So anyway, guys, thank you so much for listening to The World on Finance with Mr. Everett James, our tax advisor right here on this network. Ev, you've been with me, whoa, man, 5-6 years or so, bringing valuable information to a global audience. And I really want to appreciate that. I believe it's been at least 5 years, if not more, 6 or 7. I'm not exactly sure. Perhaps we can look that up and give more detailed information on that to the audience. And guys, kick back, grab a glass for tonight for cultural excellence right here on The Buzz, where we play new music, old school music, and a lot of your favorite hits. So kick back, grab a glass, and enjoy your Wednesday. And I want to thank you again, Mr. Everett James.
Yes, and I'll be looking forward to focusing on tariffs. Who's really paying those tariffs?
Yes. Well, I have my information, so I want you to provide yours. And so we'll talk about this a little bit further in detail next week. How about that?
We sure will. Thanks. Looking forward to it.
Thank you, sir. And as I mentioned before, Another excellent broadcast brought to you by The Buzz. Studio W, your global radio network. We circle this thing 24 hours a day with some of the finest programs you can find anywhere around the world. In the meantime, kick back, grab a glass, and enjoy your Wednesday.